Good afternoon, friends. Happy Friday to you. This isn't Tom O'Brien. This is Ken Shreve. I host Breakout Investing just before the Tom O'Brien Show every day on the TFNN network from 3 to 4 Eastern Time. Going to be filling in for Tom for hour number 1 today, and David White handling the duties for hour number 2, 5 to 6 Eastern. Thanks very much for tuning in today. How about that close for the markets today? We'll get to that in just a little bit, but first of all, the phone number that you need is 877-927-6648. Give me a call. Let's talk about this market. What stocks are you watching out there? Are you slanting bullish? Are you slanting bearish at this point? Want to hear your thoughts. Reminder that all TFNN programming is accessible on your smartphone. Easy way to listen to the program. Just open your smartphone browser, type in tfnn.mobi, and then you basically click listen live, and that's a easy way to listen to the stream. And Tiger TV on the homepage of tfnn.com. You can not only get the show audio, but you can also look at charts live right along with me. So don't forget to check out Tiger TV on your handheld device as well. To get Tiger TV to stream on your cell phone, all you have to do is open your smartphone browser, type in tfnn.com, and then over on the top right-hand side of the page, you'll see a box with 3 cell phones in it. Just click that box, and it's going to recognize what kind of device you have and start streaming Tiger TV right on your cell phone. All right, let's start by taking a look at the NASDAQ composite here. We did get a close pretty much at the high for the tech index, something that it has been doing a lot of lately. Still a lot of support out there, kind of an underlying bid for stocks. The composite ended lower by a little more than 1 point to 3134. The Dow turned in an impressive performance. It also finished up near its session high here, up almost 54 points, 0.4% gain to 13,649, and the S&P 500. S&P 500 up about a little over 5 points, 0.3% gain for the bogey to 1486. So where am I at in this market? Well, first of all, let me tell you that I write a newsletter at TFNN.com called Ultimate Growth Stocks, and I publish every Tuesday, and then in between weekly updates I send out email buy alerts and sell alerts for the model portfolio, and I send out market updates in between as well. But my general take on the market, you can see the S&P 500 has successfully broken out over its September high, so the market uptrend is clearly working here. The trend of the market is upward until proven otherwise, and so for that reason I am still swimming with the market tide here. I am currently long 8 stocks for the Ultimate Growth Stocks model portfolio. We do have one short position open, but generally don't like to be short stocks during market uptrends. The one growth name I am short is in a downtrend itself, so I still feel like I'm swimming with the tide there. But we are definitely slanting bullish here. What's gonna change my mind? What's gonna cause me to take my foot off the accelerator here? What's gonna cause me to take partial profits in the model portfolio? Basically, we start to see persistent signs of distribution in the major averages. Of course, Apple is a stock that has been under quite a bit of distribution pretty much since October, and this is a stock that we actually sold and took profits back here around $670 a share thereabouts. We booked a gain and never went back to the stock because we started to see early signs of institutional selling in the stock. Apple still can't get out of its own way. It is scheduled to report earnings next week on Wednesday, and you know, it's not looking like it's going to be that great a quarter. I mean, we could see an upside surprise, but my general take on Apple is that with all the technical damage that's been done to this stock, you know, technical damage done like this normally takes a long time to recover from. So at the very best, we could see Apple pop maybe up to its first resistance level here at 537. That would be its 50-day moving average, and then it's got resistance all the way up at 591. So it looks like it's going to be a long road back for Apple. What I've been saying on my show is that this is basically a story. You know, in December you were hearing, well, why is Apple acting so weak? It's tax selling. People are just selling. Buyers are going to come back into the stock in no time. It's mostly just tax selling, people repositioning their portfolios. I basically, when I sent my alert out in October that we were going to sell the stock, it was what's going on with Apple is two things. One, growth fund managers are liquidating their positions in the stock. It's a lot more than tax selling at this point. There are legitimate concerns about slowing growth ahead, slowing iPhone sales. How well is the iPad going to be? How long is the iPad going to stay popular? Obviously, you know, the iPad and the iPad Mini still have good market share in the tablet market, but Google providing competition, Samsung giving good competition as well. Apple's going to have a tough road ahead of it, and the question is, how are they going to innovate? What's going to be that next big product? Is it going to be as big as the iPhone and the iPad? And certainly, the way the stock has been trading, the market is not convinced that it is going to be that big. So, not a stock that I'm interested in owning here. But I must say, with as weak as Apple is behaving, it is amazing to see, overall the NASDAQ composite holding up as well as it is. It still hasn't broken out over its September high, but it just seems to be revving the engines here. So, I'm not seeing any sell signals in this market. The stocks that I'm currently long are not giving me any reason to trim or take partial profits. And the NASDAQ 100, where Apple has a weighting of, 17-18%, something like that, it still has a ways to go to get to its September high. But look at how it's just been moving sideways after this gap up on January 2nd. Really, acting mostly pretty well. And considering, again, Apple being a big weighting in the NASDAQ 100, it's not looking too bad here. Some news today: the House of Representatives will vote next week to authorize a 3-month increase in the debt ceiling. That's interesting news, because if it does get passed, that is going to remove another layer of uncertainty from the market. A lot of people were saying that, okay, we're in the middle of fourth quarter earnings season right now. Once earnings season ends, what's the focus of the market going to be? And if it starts focusing on Capitol Hill and the bickering going on between Republicans and Democrats, that's probably going to bring some sellers out into the market, because the news is rarely good in Washington. But so news today that House of Representatives are going to vote next week to authorize a 3-month increase in the debt ceiling. Who knows? If it gets passed, that could remove a layer of uncertainty from the market. And more good news for stocks here. Didn't mention the fact that today was options expiration, which resulted in higher volume on the exchanges today. At last check, volume on the New York Stock Exchange was tracking about 10% higher than what we saw Thursday on the NASDAQ. NASDAQ volume on Thursday was average at 1.71 billion. Looks like we're about 5 to 10% higher than that today on the NASDAQ. New York Stock Exchange volume quite a bit heavier. On Thursday we saw just over 700 million shares trade. We're about 40 to 50% higher than that today. But again, heightened volume, the result of options expiration. Taking a look at bond yields today, the yield on the 10-year note, 1.84%. With, if you're watching in Tiger TV here, what I'm going to do is just put up a chart of the 10-year yield here, and you can see bond yields mostly have been under pressure. They rallied a little bit yesterday, but under more pressure today. So the yield on the 10-year note at 1.84%, the 30-year bond at 3.03%, 3.03% for the 30-year bond. And bond yields were higher on Wednesday and Thursday, and the 30-year bond lower today. February gold down $3.80 to $1,687 an ounce, up 1.6% for the week. U.S. dollar index takes reclaims the 80 level, 80.05. Last trading for the greenback index up 0.5% on the day. February crude oil settles at 95.56, up 7 cents for the week, up 2.1%. And when we come back, we'll take a look at some of these oil and gas names that are getting jiggy out there. We'll do that when we come back, folks. Ken Shreve sitting in for Tom O'Brien. We'll be right back, folks.